Hey, this is Arthur Hill, Chief Technical Strategist at trendinvestorpro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to start with an update to the all-weather portfolio, which is based on signals from the Trend Composite and rankings from Stoke Close based using 50 ETFs. And then we'll look at the good and the bad signals in the Trend Composite, looking at two different ETFs because you have good times and bad. It's normal that we have drawdowns. And we'll see that consumer staples are joining the bear market. So here's the homepage at trendinvestorpro.com. And there you can see the offerings. We'll put out reports on Tuesdays and Thursdays, and a video on Wednesday, as well as an update to the composite breadth model and the market regime. And so I'm going to go to the analysis page, which has the latest reports, and it has Tuesday's report or Thursday's report, which is May 19th, today. And up at the top, I've got my market regime link, so we know if we're in a bull market or bear market, and then the ETF trends and signals. But what I want to talk about is the all-weather Trend Composite strategy. And what we do is we have 50 ETFs, 36 are equity related, and 14 are alternatives such as bonds, commodities, and currencies. And the idea is when the composite breadth model is bullish, we take signals in all ETFs. But when the composite breadth model turns bearish, we don't take signals in stock related ETFs. We just take signals in the alternative ETFs that are less correlated or not correlated to the stock market. And I've got an 8-part series on this strategy that's available to subscribers at Trend Investor Pro. And so what I did was I did an update to this strategy, and we can see that here are the closed positions, some of the closed positions from 2022, and you can see that they're all losers. It's been a rough few months here in 2022. You know, we got long banks and got out. We got long defense and got out, got long gold and got out. None of those signals panned out. Gold turned bearish a few days ago with the Trend Composite turning negative. And then we have 11 basically open longs in this hypothetical portfolio based on these signals. But you can see it's pretty defensive in nature. You know, we got energy related, the dollar, agriculture, dividends, energy, staples. Now that triggered bearish on Wednesday, so that'll be exited. Food and beverage, base metals still hanging on, energy, and then metals and mining. So there's a lot of energy in there. And you notice that there are some stock-related ETFs. And the reason they're in there is because they got their bullish signals when the composite breadth model was bullish. So in late January, the composite breadth model was bullish, which is why XLP was entered. And in late March, the composite breadth model was bullish, which is why XME was entered. Now that position is in a drawdown. It's down 20%, but it's being offset by big gains up there in XLE, 30%, DBA, 13%, even the dollar's up 8.8%, and then some big gains in other energy ETFs. So it's about drawing a balance. You're going to have losers, you're going to have winners, but the idea is to put a portfolio together that will hopefully outperform over time. It's a trend following strategy. Now, I also have this trend signal table at trendinvestorpro.com, and we can see that there are the two most recent signals. XLP, it's part of the all-weather group, you can see on the left there, and gold, part of the all-weather list, and it had a negative signal turning bearish on the Trend Composite as it hit -1. And here is an example of this table. It's got 274 ETFs, and we can isolate just the all-weather ETFs by typing in all-weather in the upper right. And once we do that, I'm going to sort by the trend, and we can see there's only 11 that are in uptrends right now. And so those are the only 11 that would be eligible for the portfolio. And the ones that are non-stock related would not get in if there was a new signal in one of these stock-related ETFs during the bear market. But you can see it's very defensive. There are no offensive groups in here like technology, because if you go down, you can see the technology ETFs are in downtrends. QQQ's been in a downtrend for 83 days. XLY for 82 days, software for 113 days. So it's not a perfect system, but it does give you a strategy to follow the trend and stay with the winners. Now, I'm of the opinion that if you're going to present a strategy, you need to present the good, the bad, and the ugly of that strategy, because you need to understand what the risks are before you get all excited about any possible returns. And so what happens is you've got a trend, that trend is your friend until it bends. And you never know which signal is going to evolve into a big trend and be a big winner, or which signal is going to result in a whipsaw and a losing trade, or which signal is going to have a short trend that's not going to make much money. We just don't know. The idea with trend following is over time, hundreds of trades, if you keep taking the signals over time, those winners will pay for the losers. That's the theory, at least. And so I want to look at a couple of trend following signals that we had recently. I'm going to look at iDrive, and I'm going to go over to Stock Charts ACP for this. This is my Amy Broker chart, which I use to develop my strategy and test the indicators. So here's iDrive on Stock Charts ACP. And the Trend Composite, you can see that link down there for plugins. Well, it's available there. There's a Trend Investor Pro Indicator Edge plugin. You can learn more about it there. And over on the upper left, you can open up to add the indicators. There are the indicators available, and the Trend Composite's just below the green line there. But what we have here is we have a pretty clean trend here, clean trend signals in iDrive. So you can see here in late spring of 2020, you get a bullish signal, and it lasts until January 2022. It is a dandy signal. It's about 80%. And this is the big trend that's going to pay for the losers. And so at Trend Investor Pro, what I do is I look for uptrends, and then I look for bullish consolidations or bullish continuation patterns within these uptrends, little consolidations that lead to breakouts, or even bigger consolidations that lead to breakouts. Not everyone works out, but when the bigger trend is up, the odds are more in your favor. So we had a number of consolidations along the way, and then the trend turned bearish, and we're still bearish. So we're still in a downtrend for iDrive, and a lot of semiconductors in this name. So unsurprisingly, it's related to tech, and it's kind of following tech. So this is an example of a clean signal using the Trend Composite. But we also have ETFs that aren't so clean, that generate signals, and some are good and some are bad. And as I said, you never know in advance which is going to be the big trend and which is going to result in a loss or a whipsaw. For example, here's copper. And so copper turned bullish in the summer of 2021, and then it turned bearish in August 2020, and then turned bearish in August 2021. And here in this period, from spring to summer of 2021, everybody was a genius. Everybody was making money. We had these massive trends going on. We had a bubble going in some groups, which burst in the spring. So everybody was a genius in the summer of 2021. And then we flash forward here to the spring of 2022, and reality is starting to set in. And you can see that because we've had a lot of whipsaws or losing signals in 2022. If you look at copper, you had this big uptrend and you caught the meat of it. You got a bearish signal right at that low in August, and you did hit a new high there in March, but largely copper went sideways. And when it went sideways, you can see the Trend Composite had whipsaws, a bullish signal, a bearish signal, a bullish signal, a bearish signal. So those would have been losing trades. And that happens. And it's normal because after a big winning trade, you go into some sort of other market regime. And that's what's happening. We went into some sort of trading range where the signals didn't work. We don't know when we're in a trading range, when we're in a trending market. I mean, if you're looking at the charts, you say, oh, and I was watching this, I thought, oh, this is a great breakout. And then we had a throwback, and that was okay. And then we continued to a new high. But here we've got a breakdown. And we can see that industrial metals are starting to act more like the economy. And that is being reflected by what's happening in the broader stock market. So industrial metals are doing that. So the trends following signals, you're going to get a few good signals. You're going to get a lot of whipsaws, and you're going to get a lot of losing signals, maybe 55, 60%, but 40% winners, and a few of those winners are going to pay for those losers over time in theory. So in last week's video, I noted that we are in a bear market, and in a bear market, you're playing under a different set of rules, and in a bear market, bearish outcomes are more likely than bullish outcomes. The odds are not in your favor. And we had all, first we had technology get hit last year, and then we got banks getting hit, industrials, and now we're seeing consumer staples get hit. They have joined the downtrend. So energy and utilities, the only two sectors left in uptrends. And so it shows you that nothing is safe. And we look at XLP, and it was on my list, but I was a bit wary and advocating small positions because we had a wedge. We had a normal pullback. We get this surge to new highs. We have a normal pullback at this stage, a wedge, retrace 50 to 67%. Looks bullish, like a setup, trying to get a breakout. It fails, and then look at that decline. And the trend composite turned negative. So all trend following signals are going to be late. You're not going to catch the bottom. You're not going to catch the top. And I don't know if this is going to be the signal that leads to a big decline or if it's going to be a whipsaw. It just is what it is. And you can see over here that the top 5 components account for almost 50% of the ETF. Actually, it's the top 4 even. Procter & Gamble, Coca-Cola, PepsiCo, and Costco. And if we take out that market cap weighting and look at the equal weight Consumer Staples ETF, we can see a similar picture, a failed flag and that big decline. Trend Composite has yet to turn negative, but this has broken the bull's back. The trend is definitely bending here. And that's significant because it's a defensive sector. And so we can see this with the food and beverage ETF as well. We had a bullish setup in the wedge, but we got a bearish outcome. And that's pretty much because of the bear market. And you could throw in inflation, rising raw material inputs like agricultural prices hitting food and beverage, and look at that decline. So very sharp decline. I think the trend, technically you got higher highs and higher lows working on the chart, and you're short-term oversold. So if you like falling knives and short-term oversold conditions, maybe, but I think this has broken the back here. And you got to remember also that some of these low volatility ETFs do have concentrations of consumer staples. This is SPLV, the Invesco low volatility ETF, 23.9% consumer staples, and it got hit hard, and the trend composite turned negative, so it's in a downtrend. So, we can see that this bear market is spreading. We look at the dividend ETF, DVY. We can see here 10% consumer staples, and it had a breakout on Tuesday, but gave it back on Wednesday. So it's still holding up better than the broader market. But in a bear market, Richard Russell, rest in peace, you always say the one who wins is the one who loses the least. Because in the bear market, ultimately, most stocks are affected. So equity-related ETFs. So energy is still holding up, and even steel is holding up a little bit, but I don't know if it's going to continue holding up because the bear market is spreading. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.